Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Financial Institutions Inc. quarterly report. Financial Institutions, Inc. offers a wide range of banking and financial services to its customers. The company's services include checking and savings account programs, commercial loan products such as term loans, lines of credit, and commercial mortgage loans, residential mortgage loans for 1 to 4 family homes, home improvement loans, and home equity lines of credit, consumer loans, including automobile, personal, and recreational vehicle loans, investment services, including customized investment advisory, wealth management, and retirement plan services, real estate investment trust that holds residential mortgages and commercial real estate loans. These services cater to consumer, commercial, and municipal customers in New York. The stock price of Financial Institutions, Inc. has increased by 23.71% over the past year due to several positive news and financial developments. The company's strong financial performance was a key driver of this growth, with significant improvements in its first quarter results, including a net income of $16.9 million and earnings per share of $0.81. Additionally, the company reported record net interest income and margin expansion, with a net interest margin of 3.65% and total loans growing to $4.59 billion. Increased shareholder returns also contributed to the stock price increase, with the board of directors approving a 3.3% dividend increase and authorizing a share repurchase program for up to 1,006,379 shares. Management's positive outlook for loan growth and analysts' forecasts of earnings growth by 53.57% per year have further boosted investor confidence in the company. Overall, Financial Institutions, Inc.'s strong financial performance, increased shareholder returns, and positive outlook have driven its stock price increase over the past year. The primary drivers of revenue growth or decline can be summarized into 3 main categories: organic growth, strategic decisions, and external market factors. Revenue growth is driven by several key factors, including the sale of AFS securities, gross realized gains on sales of AFS securities, and the restructuring of available-for-sale securities portfolio. Additionally, the company's focus on core markets, such as upstate New York, has led to organic growth in commercial mortgages. The increase in net interest income due to lower interest-bearing liability costs and higher average yield on investment securities also contributed to revenue growth. On the other hand, revenue decline is primarily driven by external market factors, including decreases in market interest rates and repricing of deposits at lower rates. Additionally, a decrease in average yield on loans and investment securities has also contributed to revenue decline. Overall, while some drivers have a neutral or no impact on revenue, such as share repurchase programs and salary increases, the company's revenue growth is largely driven by strategic decisions and organic growth, whereas revenue decline is primarily driven by external market factors. Net income and profit margins show improvement. The company's net income has seen a significant increase, with a 52% rise in the 3 months ended September 2025 compared to the same period in 2024. This growth continued into the 9-month period, with a 33% increase year-over-year. Specifically, net income rose by $7 million to $20.5 million in Q3 2025. Profit margins have also shown improvement. The net interest margin decreased slightly from 53.3% in 2024 to 61.6% in 2025 for the 3-month period, but increased from 52.2% in 2024 to 60.3% for the 9-month period. Non-interest income as a percentage of total revenue also rose, increasing from 11.1% in 2024 to 12.7% in Q3 2025, and from 9.3% in 2024 to 10% in Q3 2025. These improvements suggest that the company's financial performance is strengthening, with increased revenue and improved profitability contributing to higher net income and profit margins. The company's financial performance indicates a significant issue with its ability to generate cash from its core operations. Despite generating revenue, the company is unable to produce a positive operating cash flow, resulting in a net loss of $2.6 million in operating activities. This lack of positive operating cash flow suggests that the company may be struggling to cover its operational expenses, posing a significant challenge for its long-term sustainability. Management's outlook Focused on community banking with strategic growth, the company's business strategy revolves around community banking, emphasizing personalized service to customers. To achieve this, management is prioritizing digital channels for customer acquisition while maintaining a distinct community bank identity. Key initiatives include exploring market expansion opportunities, increasing market share within existing markets, and leveraging growth opportunities in non-interest income lines through acquisitions. Additionally, the company is taking steps to manage risk and improve returns by optimizing investments and managing funding costs. Management's proactive approach involves continuously evaluating options for subordinated debt, monitoring customer activity and liquidity profile, and maintaining regulatory capital ratios. This strategic focus on community banking with a growth-oriented mindset positions the company for long-term success. The company has a history of paying dividends to its shareholders. In 2025, it paid out $19,572 in cash dividends to common and preferred shareholders, while in 2024, the amount was $14,969. Additionally, the company reported that it paid dividends totaling $19.6 million. Furthermore, the company has also engaged in share buybacks through a program approved in September 2025. In 2025, it purchased $515 worth of common stock for Treasury, and in 2024, it made a share buyback on December 13th. That concludes the financial summary for Financial Institutions Inc. Feel free to comment below, and I will be happy to answer them when possible.